Hi guys, and welcome to volume 7 of my Forex market breakdown. Coming to you guys live on Tuesday afternoon instead of Sunday. The reason being is I got caught up with some other things, but that doesn't really matter because we haven't actually missed any opportunities as of yet. However, catching up from where we left off from volume 6, where I solely broke down Euro to Australian dollar shorts. Pretty much where we stand at the moment is I did highlight my clear downside target of 1.57500. The setup where we last left off last week was this setup here. I posted this on March the 18th on my Instagram and also on my trading view. I was highlighting shorts down from about 1.59702, and then again 6 days ago I mentioned that the daily resistance hadn't yet been broken above. We had wicked and I still favoured shorts down to that level. Also yesterday I posted on my story just highlighting that we're still looking to creep down to 1.57500, so I've kept everybody up to date on this trade. It's just a case of going back and recapping over this pair. So pretty much where I said that we mentioned the short setup 59702 was roughly around this zone here. If I can just get off the magnet here, 59702, so roughly around this kind of short area here. This candle is where I mentioned my short play. We did in fact look for one final test of 1.60500, forms that lower high from these highs here, and ever since there we've been collapsing with rapid pace. Let's just head into the lower time frames and have a look at this decline much more clearly. As you can see, the 4 hour was where I was looking at the setup in more detail, kind of from these candles here around the 50 EMA, but as I said, we had one final test of 1.60500. Manipulated probably a few longs into the trade, but after these two strong bearish candles it was all short biases from there on in. At the moment today we've just been declining, sliding all the way down with little to no pullback. If I just head into the hourly time frame as well, it looks like this target could be fulfilled within the next couple of days, and that will represent another successful trade highlighted on the Forex market breakdown videos and also on my Instagram. I think at the moment we're about out of the last 5 trades I've posted, 4 have been successful winners with over 100, 200, 300 plus pips. Anyway, heading into this week's analysis, I'm also going to start off with an Australian dollar pair, and it's one I haven't covered in a while. It's the Australian dollar to Japanese yen. Initially starting off from the higher time frames, doing a top-down analysis, we can see clearly on this monthly time frame that the zone between the monthly support at 7200s and 7400s has been strong support for quite a while now. I mean, every time we've kind of entered this zone dating back to 2009, we've rejected it and at least pulled back to at least 8800s. So we see one occasion here, 2, 3, 4, 5, 6, 7, 8, and more recently on January we had the 9th rejection of this zone. If I was just to zoom in more clearly on this monthly time frame as well, we can see that February's candle came down, tested 7800s but failed to close anywhere close to it, pulled back up almost to its entry, the month's entry point, and then this month's candle looks to have another test at 7800, looks to also reject it, the candle not falling as low as the lows of February's candle, which highlights that the bearish momentum is weakening across the higher time frame. So that sets the momentum heading into the lower time frames. So moving on to the weekly, what I've done here is this range consolidation range is actually set out on the daily time frame. I'll just go head over here, and this is where we can see it a bit more clearly. So although we have got strong higher time frame support on the 7800s, Doesn't really show prominent on the daily time frame, so what I've just done is I've marked this short here between 77 spot 600s and 77 spot 800s. As you can see, once we entered this zone here, we rejected it, we did break through it, acted as resistance initially, broke above it. We had 1, 2, 3, 4, 5, 6, 7, 8, and now the 9th test of support. Again, resistance just kind of bordering 79 500s. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 tests of this zone too. So we are very much in a consolidation period on this pair, and this range zone also can be seen quite clearly on the weekly time frame with multiple wicks. However, with this in mind and the higher time frame support, what I do favour on this pair is definitely a long trade. But because we are in this range consolidation period, there is no opportunity for me to enter a long trade at the moment. As you can see, just looking across the lower time frames, it looks like we're sharply rejecting support, probably heading up for another test of resistance. My ideal scenario behind this pair would be this week to come up, test resistance, preferably break resistance, maybe have a touch at the 80-100s. If we can break and close above resistance, then I'll be looking for the simple and standard retest rejection, and then I will be looking for long entries all the way up to a long-term target of 8800s. Initially we could put a short-term target at 8300s, but ideally we're looking for that very high pip target of 8800s. Let's just double check what that pip count would be if we managed to obtain an entry off this resistance zone here. We'd be looking at somewhere between the region of 800 to 840 pips. The reason why I'm targeting 8800s, that all stems from the higher time frame. So I showed you the support down on 72 to 7400s. And if we just simply scroll left, looking at the history of this pair, every time we've entered this region here, we've come up and we've tested 8800s. So we entered the region firstly here, come up, 8800s was hit. We took a final dive, entered into this support zone, rejected, come up, 8800s was hit. Again, for the third time in a row. We came down, we rejected support, we came all the way up and we hit 8800s. And this goes on and on and on, and you can even have a look back and put these key levels on your own charts and do a bit of research into this. But again, the previous test of 72 to 7400s, we had it, we rejected it, and we had a bull rally into the 8800 region again. So that's what I'm looking for price to do. We could, my word isn't gospel, we could just break below range support and have another test of these zones here. We could just completely have a test of resistance, continue to consolidate until eventually support was broken. We could dive back into the 7400 region. If that happens, it's not a trade I'm looking to take. It's not an opportunity that I will be acting on. That's because I would not feel confident in shorting this pair at all. So, with that in mind, it's just a case of sitting on our hands at the moment, potentially looking for formations of new higher lows on the lower time frames, the hourly to 4 hourly, to potentially enter a short-term long within the consolidation range. But overall, I'm looking for a break above resistance, a retest, and then a long up to 8800s. Again, I'll be keeping an eye on this pair, and if this scenario does work out, it will be posted on my trading view, and it also will be posted on my Instagram. So the third and final pair that I'm going to go over today is another Australian dollar pair, and it is in fact the pound to Australian dollar. I believe that I haven't actually covered this pair in any of my previous videos before. That's because it hasn't really offered any opportunities for me to trade a favourable position. I mean, if we just look at the monthly time frame here, for me personally, this current bull trend that we are in just doesn't seem to be that prominent for me. I mean, we are clearly in a bull trend here at the moment. Higher high, higher low, higher high, higher low. You get the picture. Anyway, personally, reading between the lines, I don't think that this is a strong trend, although I could be wrong. I mean, we have pierced 1.800s, we have retested it, and February's candle was a very strong bullish engulfing candle. And definitely in the long term, this pair could go higher. I am strong on the pound in the long term, but I think for the best trading opportunity on this pair at the moment is a short-term short. Again, the same bias kind of shows on the weekly time frame. There's not really much to note on this time frame itself. It's more about the daily and lower time frames. But it is very clear that we are in a bullish trend. That we are forming bullish trend structure. We have been pretty much since 2016, so we can't take that away from it. It's just I just don't see it being strong enough to form another leg to the upside without a favourable pullback, I think is a good way to explain that. Moving in on the daily anyway, and getting into the technicals, what I have is I formed this short-term consolidation range, which sits between 1.8400s and 1.8800s. We previously used 1.8400 as resistance. We can see back here in January 2019, and when we had another retest of 1.800s, we came up. We initially used it as resistance before piercing it. Once we entered this consolidation range, we used 1.8400 as support, tested 1.8800 as resistance, and most recently on the 21st of March 2019 we retested 1.8400 as support again. However, what is more kind of eye-catching on this time frame is the trend structure. Although we are in a bullish trend, we have seen some slight reversal patterns. So we'll start off down here. So what we've got is a higher high and a higher low, like so. This following a bull trend formed another higher high here, higher low, back up to a higher high, higher low on this point here, a higher high here, almost its final higher high before it kind of broke a bearish trend structure. I mean, this could have been the basis of a potential short trade if I spotted this, but I didn't. And luckily I didn't, because actually price rejected this and made another high on 18800s. However, since then, what's happened is this decline in price coming back down to 8400s. And if you look at the candle close, we've fallen below this previous high low here. What that suggests to me is a shift in the overall trend structure. I mean, if we're following a bullish trend, we need higher highs, higher lows consecutively. However, the previous decline in price actually broke below the previous high low, which to me says, okay, maybe that's an initial step into shifting the overall trend. Not in the long term, maybe just for a sizable pullback. So it's just keeping my eyes open for spotting if price has formed an initial lower high. So moving on into the lower time frames, we can see that since hitting 1.8800 resistance, we have formed a short-term bearish trend structure. Lower low, lower high, lower low, lower high, lower low. Potential lower high here. However, what I've done is I've actually marked on short-term support around 1.84500 here. I mean, we acted as a support here. We then used it as resistance. Once we broke above it, support and support. So with this in mind, I mean, it probably hasn't been very clear the way that I've explained it, but it's very clear in my mind. I do sometimes have problems relaying what's in my mind in word format. But being the case for a trade entry, what I would like to see is a break and close below 1.8400s on the daily time frame. which to me would suggest, okay, the consolidation range has been broken. The bullish trend structure has been broken. We have formed bearish trend structure. It's then looking likely for us to take a dive into 1.800s down here. Now, if you were a bit more risky, if you're a bit more of a risky trader and you wanted to obtain a greater risk to reward setup, what I'd be looking for is a break below 1.8400s on the lower time frames, and potentially a retest back up into this short-term support zone. And if we were to see something like that, then I'd be looking for a complete dive short trade into 1.800s, the monthly time frame, something of that caliber. Now, the problem with this is if we were to see a break below this support, we could enter short. However, it would only solely be based on the lower time frames, because what could happen is this support could be broken. Price may not close below 8.400s, and what that would show is a successful retest and rejection of the support on the daily time frame, and we could use that to begin its next bullish rally to new highs. So with this pair, what I favour is a break below and close below 1.8400s on the daily time frame. If we can see that, and even a potential close below the 50 EMA, then for me I'll be looking for a pullback, retest and dive into 1.800s. Again, let's just check the pip count on something like that. If we manage to obtain an entry around 1.8400s, there's lots of potential places we could put our stop loss, and we'd be targeting 1.800s, which rounds off to a rough pip count of around 400 pips. We could obtain any sort of risk to reward from 1 to 4 or to 1 to 2.5. With that in mind, again, if an opportunity arises on this pair, I will be posting it on my Instagram, which is at NickLindleyFX. It's the exact same as my TradingView profile, which I'll just show you guys now, which again is where I post a lot of my trading ideas on a regular basis. But thank you very much, guys, for watching. Make sure to leave a like rating if this video has helped. Remember to use it alongside your own analysis and don't take my words for gospel. I do apologise if whilst breaking down these pairs it didn't seem clear to you, or you didn't understand anything. I am learning to become confident on YouTube, and being able to explain what's in my head more clearly to an audience who can hopefully take my words and benefit from them. Anyway, guys, make sure you leave a comment if there are any currency pairs that you want me to cover. I mean, I'm happy to do so. It's an enjoyment for me. If not, make sure to subscribe so you never miss an episode on this channel. As I say, the last 5 trades that I've posted based on the analysis performed on the Forex market breakdowns, 4 out of 5 of them have been successful trades of 100 pips to anywhere close to 500 pips. So if you managed to catch any of those trades, let me know, and I hope to see you next week. Enjoy and have a great week. Bye.